Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's April 16th. We got a couple economic news releases scheduled here for today. We're going to start with the CPI, or the Consumer Price, the inflationary index that we use for the consumer level. And back last month, this is the headline number, we had a 0.7% increase. This month they're figuring it's going to come back a little bit, contract down to about negative 0.1 and contract to negative 0.2. So much better numbers than we had last month. Obviously, last month we said to keep an eye on this, and we showed a little bit better. Now we got, when you strip out the food and energy, we get the core, and this is the favorite gauge that the Fed kind of looks at because of the volatility between food and energy. So we had a 0.2% growth last month. The forecast for this month was 0.2, and it was only up 0.1%. So year over year for inflation right now is showing about 1%, so very tame. So it gives the Fed, with the quantitative easing and everything, a little bit more flexibility with the quantitative easing that they've been utilizing, and so we don't have the inflation control, or have to fight inflation rate at the moment. So we have a little bit more leeway. So that's good news here. And then we also got the housing starts for the month of March. Now we had 968,000 created last month in February. We figured it would kind of come down a little bit by 933, and actually topped the 1 million mark. So nice numbers there. Now the for single families it dropped a little bit, but for commercial 5 units and above it actually increased a little bit. So about all that million, you're looking at around between 600,000 and 700,000 are single families, and most of the others, about a little over 300,000, is mostly for commercial. So this is something to kind of watch for. Obviously, we'd like to see more single families. So obviously, we want to see people buying homes, even though that's what we're saying. But if you looked at yesterday's numbers, the index for home builders were kind of dropping a little bit, and they did say that permits, which are looking at future use, dropped as well. People applying for permits. So this is something to kind of keep an eye on as well going forward. And then we also had the last but not least, we got the industrial production for the month of March. So we had a 1.1% growth for production for month of February. We figured it would come down a little bit to 0.3, and it came in at 0.4. So a little bit better than expectations. So let's go over and check out the headline news right now. And the stock market's up, especially after yesterday when it was down a bit after the news about China, GDP decreasing with the numbers from the housing, as we talked about, the home builders index. So, and then also we had not so good manufacturing in New York region with the Empire Index. So that kind of pulled the market back and helped out the bond market, which we'll see coming up here. Also earlier this morning, we had the Philadelphia Fed member Plosser speaking. Basically, he was giving his statement about how he feels that we should have an exit strategy with the quantitative easing coming, at least have some type of plan ready, so when the time comes that we have an exit strategy. That's what he was speaking about earlier. Now we'll just go ahead and jump up at the market here. As you can see, yesterday we had a nice little rally. We did go upwards, but today we start off about 21 basis points lower, even though we're up about 9 basis points for the day. We're still a little bit lower, so there's a worsening in the pricing today, and we're kind of testing the floor. But we're still, the good thing is we're still above the the 100-day moving average. We're still above the 200-day moving average. So those will create the floors of resistance for us. So kind of create a nice strong floor for us so we could keep upward bound. All right, so rates are a little bit worsening in the pricing today. Hopefully going forward we'll see some better pricing. You guys have a wonderful day. We'll see you guys tomorrow. Thanks for watching. And again, we'll see you tomorrow.